Hey guys, welcome back to the channel. This is the first video on eToro, the social trading network, and thank you all for all the support on the first video. We got plenty of feedback and I think 24 likes as of recording this video. So yeah, thank you to every single one of you who watched that last video. We got a lot of support and it's going to really help us build this channel in the future. So we're going to go over our portfolio, as you can tell by the title. As you can see, we're up 2.45% for the month. We've only been trading for 1 month, and it was a very turbulent month in the market, as you've probably seen. The Dow Jones dropping as much as 34%, which is just outrageous in 1 month. One of the worst months in history. I'm recording this on the 1st of April, and yeah, the headlines in the news do not look too optimistic. People think this coronavirus situation could go on for months, and they're probably right. So I'm being very defensive with my portfolio allocations. So as you can see, we have an average risk score of 3. eToro gives you a risk score from 1 to 10, 1 being very low risk, 10 being very high risk. You can find out more about it with the information bubble on the screen once you sign up, or if you have an account already. And yeah, our maximum drawdown, you can see there, 0.7% or 0.70%. That's the most our portfolio has been down in the negative so far. Don't read into that too much. It's definitely going to increase. 0.7 is extremely low. And the market will probably dip lower in the coming months, my personal opinion. And you can see we have 100% profitable weeks in the bottom corner, which is of course a great thing to have. For, as you can see, we've only been trading for 1 full month, and you can see our average trade time, how often we sell a certain stock, which will increase over time. So some of the statistics are a bit off because it's only 1 month's history. You can see we have 10% invested in Tesla, and then you can see Disney, Apple and Facebook make up the rest of the portfolio. And you can see obviously 10%, 3.3, 1.6 and 1.6% does not equal 100%, because most of our portfolio balance is just that. It's a balance, it's not invested, because I think there'll be plenty of opportunities coming up soon. So you can see I have loads of single trades, and the reason I'm investing small amounts at a time is to average in. So dollar cost averaging is about buying at different prices so we can average in and get an average price overall. Because if I had invested all of it at 500 and the stock falls to 460 or 450, you could be down 10%. But if you average in every now and then, your average price tends to outperform just buying in at one random price point, especially when the market's in free fall. So you can see we're positive on every position. Disney, Apple, Facebook and Tesla. I'm going to go over why I have the certain positions now. Tesla's 10%, which is huge, 1/10 of our portfolio, but I actually want to build that up. I want to be around 16.6 to maybe 20% of the entire portfolio, because my investment philosophy is around finding innovative startups. Well, I know Tesla's not a startup anymore, but they were very, very aspirational, and they've achieved most of their targets, not within the time frame they wanted to, but I think they're going to continue, as they've been performing exceptionally well in terms of compounding revenue and just their designs. I'm sure we've all seen a Tesla. Just incredible. I'll go into that in more detail in another video to break down the numbers, because of course saying that Teslas look great is not enough when we're talking about business. So as you can see, Disney's price has been crushed. Our average position there, our average price is $90.59 per share, because as you can see we bought 2 separate batches, one at $94, one at $87. And the reason I did that again is dollar cost averaging, because if I had bought all at 94, I wouldn't have got the return that I have, that I bought some at 87 as well. Then I have 1 purchase of Apple, because I think this could fall lower. It's still $1 trillion company. I think the panic in the market will set in and it could drop lower. So that's why I've only made 1 purchase at the moment. And the reason I have these 4 core positions, Tesla, Disney, Apple, and we also have Facebook. Facebook compounds revenue very, very efficiently. They still have WhatsApp, which they should monetize more. Instagram, obviously. I don't own Facebook just for the Facebook app. I think Instagram is definitely their crown jewel, so to speak. And as you can see, we've only made 1 purchase there. I want to buy more as it falls lower. We got in at a good price, and that's why we're in profit. But that profit, I think, will turn into a loss in the short term as we, as I said, slide lower because of the coronavirus issue. We have $2,500 available and $500 allocated. I allocated $3,000 to this account, as you can see. Start value, first deposit was $1,000 and then $2,000 was added. I think $3,000 is enough. If we ever have an issue and I need to add more, I will. And the reason why I've allocated that much and not just 1,000 for example, is because on eToro, the minimum purchase amount I can do is $50. So let's say I want to buy more Disney stock, I need to do a minimum of $50 purchase. And that means that will take a 1.67% of 3,000, because that's what 50 over 3,000 is. And if I want to be able to dollar cost average in, I need a small percentage, because if I had an example of $1,000 of available balance and I buy $50 worth of Disney, that would make up 5% of the portfolio, and that's after 3 or 4 purchases, it's already 1/5 of the portfolio. So I've decided against that, and I decided $3,000 is about right. And so 5 individual purchases of $50 is what we have for Tesla, and that's why we have 10% of our portfolio in Tesla. So you can see here just the fluctuations throughout the days. There was actually a point where we were up 3% for the year. Right now we're up 2.45 as of last night, and as you can see there, our loss for the day is around 0.7%. So that 2.45% return for the month is locked in because it's now April, but we're going to start off April with a 0.7% drop, which is fair enough, seeing as the markets have been quite unstable at the moment. As you can see, everything in the red. Realty income right there being hit hard, down almost 10%. This is just my watch list of potential stocks I want to buy. You can see gold in there. I probably will add maybe between 3 and 5% of the portfolio to gold. I am a believer in gold. I do think it'll perform well, seeing as now it looks like we're destined to head into a recession. And the International Monetary Fund actually did declare this a global recession as of this morning. Square is another very, very promising stock that I think will continue to increase in value over the coming years. If I do eventually buy Square, it'll be for the next probably 4 to 5 year period. I won't be buying and trying to sell in a few months unless its price spikes. But $47 is a bit too much for me. It went as low as $33 last week, but I didn't pull the trigger, and I'm quite annoyed at that. There was just so much fear in the markets that I was focusing on Tesla and a few others, like obviously Disney, Apple, and Facebook. That's why I purchased those. But I didn't want to have 10 stocks on my mind that I had to follow their prices every day. And of course, for long-term investing, the benefit is I don't care if I buy at $47 or $46, because we're in for the long run. We're not hoping to make a profit in the month. So as you can see, the minimum we can buy is $50, which is 1.6% of our equity. So that's why I allocated so much to this account. So much depending on your relative scale. $3,000 might not be a lot for some people, but for new investors, that's quite a lot of money to be investing. And yeah, so that's our portfolio. We will add many stocks to it in the future, but Tesla will be the main element of our portfolio. I think it's an incredible company, currently valued at about 90 billion. As I'm recording this video, it's actually dropped to about 88 billion. Its share price has dropped lower than, as you can see on the screen, to about 478. And yeah, so that's our portfolio. You can see there 10%. We're hopefully going to increase that, as I said, to around 20%, if not more, which will add significant volatility to the portfolio. So to counterbalance that, I will constantly hold a balance of at least, I'd say, 10% cash, and some gold as well, because gold tends to be more stable than the overall market in terms of fluctuations. So that'll be important to hold. You can see here, $15 a share of an ETF, iShares Gold Trust. An ETF is basically just a fund that holds gold, and its value will increase as gold increases or decrease, because obviously it's backed by gold, essentially. And then you can see the return for 1 year. Gold has performed extremely well in the last 12 months. It's very surprising to some, but most people who are interested in gold will know that it's been coming for a long time. Especially with volatility in the markets, investors tend to turn to safe havens over stocks because revenues tend to get slashed or cut in half during recessionary periods. So Tesla is going to report its delivery estimates and earnings very soon, because of the first quarter has ended. So very interesting to see what happens, and that's why I haven't allocated all my money towards Tesla, because it could dip lower. As you can see, this is our account on the platform. You can see my name, full transparency. That's why I love this platform. You're able to know everything about me. You can see a picture of me. It doesn't have that little camera icon if you go on your account and search it up, but it does for me because obviously it's my account. And yeah, I'm just going to show you an example. This will happen if you go to my screen. This is just an example of another guy called Social Trader on the platform. You can see his returns for the last 2 years. You can see his risk score, how many people have copied him and copied his trading activity, and the trades that he's most frequently done. So if you go to our portfolio, you'll be able to see a copy symbol in the right top corner, and you can, if you feel like our returns or our investing philosophy aligns with yours, you can actually copy a person's portfolio, which is great about eToro. I think it's probably the only platform that allows you to copy another investor's trades. So as you can see here, the minimum is 200 amount, as you can see, minimum amount to copy. And basically you'll copy their trades with the same proportion. So if they have $1,000 in their account and they buy $100 worth of Apple stock, you buy $20 worth of Apple stock, you'll buy the same 10% proportion. So yeah, it really helps people who are new to investing and want to copy other people. And this copy stop loss, essentially if you invest $250, as you can see on the screen, and it drops to $50, so he loses $200, you'll get your 50 back. So just exit the trade. So it's highly beneficial if you are averse to risk. So as you can see here, if you set it at 200 and you invest 250, as soon as it drops 20% in value, it'll automatically stop your positions with that trader. So there's plenty of features for risk assessment. So yeah, this is just an overall view of the portfolio, what our plan is. I'll do plenty of videos in the future outline why I pick certain stocks over others, and of course we're not going to have just 4 stocks in the portfolio. This is just a general overview of our portfolio at the current moment, as you can see here. So yeah, Disney I think is going to rebound once we get out of this situation, because we're in an unusual situation at the moment. It's not actually a recession, a regular one where there's a contraction in the economy. It's due to basically there's a freeze on work. The supply chains are out of tax, they're just not going right, obviously because no one could work. Well, some people can still work, but it's grinded to a halt in most countries. And as you can see here, most of our portfolio, you can see the balance in the right bottom corner, we're just holding cash because we're waiting for opportunities in the market, and I want to buy plenty of other stocks once they become cheaper and more attractive valuations. So yeah, thank you guys for watching. Hopefully you guys enjoyed. I'll make sure to keep you up to date with a new video in the next few days. So make sure to hit the like button and subscribe if you're new, and I'll talk to you guys very, very soon.